Over in the pits of the CME, David Wright, right here in the studio, tells us what he thinks is the most undervalued asset right now. And Brian Gendreau breaks down why we could be in for an upside surprise that could take us to 1600. I don't mean 4 o'clock, I mean 1600. Let's start with Larry at the CME. Larry, you are citing a lack of buyers, is that right?
Yeah, it sounds overly simplistic, but really it's the lack of buyers that drove market action today. Let's face facts. I mean, on Friday, we had a dramatic shift in the market. We went from being macro-focused, China, Europe, U.S. fiscal cliff, to being micro-focused. All of a sudden now we're worried about every single earnings. There have been some terrible earnings. There's also been some good earnings. But if we wanted to move this market down, it would go down a lot further than it is right now. So right now it's a consolidation and just a general dearth of buyers right now.
Okay, except that just as there is a dearth of buyers, you might have one positive piece of data out of China, which we've started to see as a little bit of bottoming. You know, everyone looks to the iron ore exports from Australia to China, and suddenly they started to tick up a bit in September. So I'm wondering, you know, are people going to be caught flat-footed if they're not at least partially invested in stocks?
You know, I think they will be. I mean, I think setting up for Armageddon, waiting for coast is clear investing never, ever makes sense.
Never works.
I mean, when you compare... Yeah, I mean, when you compare the stock market to bonds right now, or to REITs or MLPs or what have you, they're actually a stunningly cheap buy. I'm not saying the stock market's going to continue to move up higher and higher every day, but when you compare it relative to everything else, it's profoundly cheap right now, and everybody needs to be invested just a little bit, maybe a little underweight, but be invested in the stock market.
Larry, we knew going into the earnings season that it was going to perhaps be a tougher go of it. Are you surprised at some of these revenue misses, or is it pretty much in line with what you expected?
You know, it's really what I expected. I mean, I talked about it last week. The top-down number was $116. The other number was $106. There was $10 of expectations already baked into the market, of negative expectations. So it doesn't surprise me a bit. What I am surprised by is how we focused on micro issues so quickly on Friday.
All right, Larry Shover at the CME. Larry, thank you so much. Of course, we'll be checking back in with Larry in a little bit.